What's up, guys? It's Blake here with Trade Tracer. Make sure you go ahead and click that link in the description to receive free signals in my Telegram group. Also, make sure you check out tradetracer.io. That's my website where I offer premium signals and alerts to premium members. So today is Friday the 3rd, and we are going to talk about how we're going to prepare for next week and what the heck is actually going on in the stock market. Once again, it was a very choppy week, very volatile up and down. And as always, guys, I want to start on the monthly time frame because most of us are long-term investors. Some of us, have 401ks. Everybody who is wanting to acquire more wealth is typically invested in the stock market. So the monthly time frame is a very good time frame to kind of take a step back and see what's happening on the bigger picture. Okay, so as you guys know, we do have this long-term uptrend line dating back from the 2009 lows. And this previous month, so obviously this is our first close in April. So March, we closed right at that trend line, and that's what this candle is. This entire candle is March trading, and you can see we closed right at that trend line. So we have the first week of April, and we haven't even tried to breach above that trend line. That's this little candle right here. So one of the things I want to bring to your guys' attention is market structure. Now, if you follow me in Telegram or you're a premium member, you guys know that I talk about breaking market structure. Well, what that refers to is breaking a major trend line. Now, this is a monthly chart, so you can see we broke market structure back in 2000. So this is the dot-com bubble. You can see this uptrend line lasted here. We broke below it with a MACD bearish crossover. You can see the MACD turned lower, and we broke below this trend line. Okay, once again, happened in 2008. Okay, MACD bearish crossover on the monthly time frame and broke market structure and was never able to recover. Okay, so now we've been in a bull market for the past 11 years. We've had this uptrend line. We've tested it several times. It's acted as support every single time. And now for the first month, we're actually trading below this trend line with a, guess what? MACD bearish crossover. So long term, unless we can get back above some key levels that I'm going to highlight later in this video, things don't look fantastic in the stock market. I get questions every day, all the time. Hey, Blake, what am I going to do with my money? Are we in a recession? Are we in a deep, are we going to go much lower? Should I buy now? There's a lot of confusion out there. So what I like to do is I like to take a step back and analyze it that way. So let's go ahead and move to the weekly time frame. Now, as you guys know on the weekly chart, we are in a downtrend, just like we are on the monthly time frame. And as soon as my chart loads up here we go. And so you guys can see on the weekly time frame, once again, we have a bearish MACD still heading lower. And one of the things that I think is interesting is this 200-day moving average. So I just pulled up this 200-day moving average. I'm going to take it away right there. Here we go again. So 200-day moving average. This is a very, very important moving average, especially on a weekly time frame. So those of you that are trend followers or know anything about investing or anything about trend following, the 200-day SMA, the simple moving average, is a very, very, very important moving average. And for the third week in a row, we are now closing below that 200-week moving average. Okay, so let's go ahead and zoom in, get a better picture of this. So you can see this is the March 16 week. This was the lows that we made the previous week and had that extreme rally. And then this week, we came back and tried to test this 200-week moving average, and we're never able to get back above it. And that 200-week moving average is 264.21 right now. Okay, so on the SPY, keep a close eye on that 265 area. Okay, 265 is a good area to keep a very close eye on. So you can see we broke below the 200-week, came back and tested it, tried this week again, and kind of got rejected and sold off. And guess what? We are below this uptrend line. So I'm going to go ahead and take away this 200 MA so you can see that. Still below this uptrend line. And as you guys know, this is that 11-year uptrend line that's been in place. So not a positive sign. Okay, we really needed to get above some key levels. Now, as we zoom in even closer on the time frames, this is a daily time frame, and I'm going to go ahead and move this to a 20-day moving average. So on the daily time frame, if you guys have followed me, I've notated some very important price levels that we need to be watching for our next trade. So for me personally, it's pretty simple. Okay, we have the highs here made back on this candle where we wanted to get into an uptrend and make new highs. It looked like the market wanted to rebound or at least bounce a little higher than it did. And you can see this high is right around the 263.40 area. Okay, so keep a close eye on that. The reason that I like that price level is because if we close above this price level on a daily time frame, it would confirm price strength confirmation to the upside. And another good thing that I like about it is it would be closing above the trend line and above a key price level. So the odds would be more favored to the upside, that price would go higher than lower if we break above this and close above this 263.40 area. Okay, now on the downside, the price level that I'm watching is 243.75, call it. Okay, so this area right down here, this is a very key price level. And if we break below it and close below it, we likely come back and test the lows, which is around 219, 220 area. Okay, so right now we are at a very important moment in the overall stock market. We have really at a tipping point. Okay, I messaged my followers today. The market really doesn't know where it wants to go right now, and the best bet is just to be patient. And I know it's difficult, even for myself. I know it's difficult, but the best bet is just to be patient, preserve your capital, and wait for a break above this 263.40 area to go long, or a break below this 243.80 area to take a short position. So that's exactly what I'm watching. That's what I'll be watching next week. I will be sitting on the sidelines, waiting for my signal, preserving capital until we can have that price strength confirmation or that price weakness confirmation to the downside. So I wanted to bring up this 20-day moving average because on a daily time frame, the 20 MA is a very strong trend following moving average, and you can see the S&P 500. Okay, ever since we closed below it, this was like the gap below the 20 MA on February 24th. This is kind of what started that selling. And that would have been a signal for you to think, okay, maybe I should start taking some risk off. And if you followed us, we actually did. We went to cash. So we sat out this entire downward movement, okay? And you can see we've made a couple attempts to try to close above this 20-day moving average, but we just still haven't been able to do so. So we tried here, couldn't do it. Tried again on March 31st to end the quarter. We tried, but we also got rejected again. And ever since then, that 20 MA has been acting as some stiff resistance. So if we can get above that 20-day moving average on the S&P 500, that would be a very positive signal. Okay, so keep a close eye on the 20-day moving average. Now, what am I in right now? Gold. I mean, there's really not much else to be in. A lot of the portfolio we've been very conservative with. Now, the reason I like gold on the higher time frames, it looks really, really positive. So on the monthly, the weekly, it looks very strong. And in times of crisis, people typically flock to safe havens. Now, when we had that crazy sell-off, when everything was selling, including bonds, including gold, that was not a flight to safety, but a flight to cash. So people were just pulling their money out of the market. Fear was reigning supreme. People didn't know what to do with it. And I feel like things have kind of calmed down a little bit. And so people are starting to allocate back into gold to some degree. So on the monthly time frame, I mean, gold has this spike up and then this bottoming pattern. And now we're starting to come back and maybe test these highs. Potentially within the next this is a monthly time frame. I think maybe by the end of the year, we could be much higher on gold. Okay, so keep a close eye on GLD. But before I go, I just want to recap. Make sure you guys are staying safe out there, okay? Keep a close eye on this trend line. As you guys can see, we are technically breaking market structure. So we are having a lot of momentum to the downside. Sure, you're going to see some relief rallies, but keep a close eye on some of the key price levels that I pointed out in this video, specifically the 264 area and the 243 area, if you want to have a little bit of wiggle room in there. before you make your next trade. So if you like this video, make sure you guys hit the like and subscribe in the bottom right of your screen, and also make sure you give me that thumbs up. Hope to see you guys again soon. Make sure you have a very safe weekend. Make sure you're washing your hands. Try not to think of this time as a negative time. There's a lot of things that we can do at home. Make sure you're calling your family, your loved ones, and stay positive. You guys take care.